All right, guys, and welcome to another episode of Trading Indicators Explained, where we actually go through different trading indicators that are on Trade Ideas charts, talk about the math and the logic and everything behind them, and see if there's a way that you can add these directly to your tradings. Today, we're doing the Bollinger Band Width. We did the Bollinger Bands on a prior video, so check that out if you're interested. And then you can take a look at this one, which is kind of in addition to that prior indicator. And again, links are always in the description down below as a way to save money if you want to try the product, and it helps out the channel as well. So the Bollinger Band Width. So here is the math for the actual Bollinger Bands. I'm leaving them here because the actual width of them is just subtracting the high of the band and the low of the band. So just to summarize what we went over last time is the Bollinger Bands is essentially a 20 period moving average, plus or minus, depending on your top of the bottom of the band, plus or minus a standard deviation of how much that stock generally moves. And you do two standard deviations there because that's supposed to capture 90% or so of the movement. On the Bollinger Band Width, basically what you see on your chart is this line below the screen. And this is used quite often for people who use Bollinger Bands for their intended purpose, which is to show what's overbought. And then from there, but they don't want to clutter up their charts. They don't want to clutter up their price action or candlestick traders, but they still want to look for that congestion of range and that expansion of range that the Bollinger Bands show us. So they're able to do that on the charts, but without cluttering up their main screen. So what are the uses for just the band? So again, you don't know where the top of the band is and you don't know where the bottom of the band is. So what's the use case for just having the band itself? Well, the main one is looking for historical volatility comparisons. And this is, if you've heard this term in options before, this is something completely different. But basically what I'm saying is how much is the stock normally deviating around this 20 period moving average versus how much has it been deviating around this 20 period moving average in the past. So for example, Tesla, you can see there's periods where the Bollinger Band is very, very high. There's a lot of movement to it, and then there's a Bollinger Band where it kind of drops off. And that's the main use. The number is irrelevant in and of itself. It's looking at this kind of past action and saying, okay, what's changed here? So here's another chart, THC, and this is some way that some people may use that, where you can see THC from October on, which is the very low point of the chart, has been trending higher. You can see that the best time to kind of look at THC is not when it's ripping up and that volatility is high, but each time that volatility kind of takes a break, it lowers down to the bottom, presented a great way to contribute and to get back into this trend. So that's the main usage that I would see for this. So let's quickly go over to the live charts and just take a look at what this kind of looks like in live action. So let's just bring up the SPY, for example, and just take a look here. Actually, let's get rid of me right there. So as you can see, this really isn't interested in price direction. It's interested more in the deviation around that mean. So in times like this, where you have a nice slow uptrend like you see here on the SPY, you can see that this is dropping off, just saying that this move is taking place in a very orderly, controlled kind of fashion, where over here, you can see in this price action where we had this big rip up and then this gap up and this sell off, the deviation around that 20 period moving average is dramatically increasing. So again, the uses for it are to look at, okay, what are we doing now as opposed when it comes to standard deviation, as opposed to what are we normally doing? And is this a calm period of time where maybe I'll look to take a position or an entry? Or is this a crazy period of time in which maybe I'm going to think that that's going to denote a top or a bottom of a move and maybe take an inverse position? But this particular indicator doesn't talk about direction at all. It's simply looking at how much has the stock moved versus how much does it normally move. So that is it for this indicator. It's a pretty simple one because it's in addition to another indicator that we talked about recently, but again, one that I am liking and looking at more and more is a way to hunt for these calm periods of time before trend continuation. So again, the whole point of this series is something that you guys maybe be able to add to your repertoire and see if it's something that interests you. So that is going to be it for this one. And until I talk to you in the next one, trade safe.